Alrighty. Hey guys. This is pretty much a continuation of what I've posted for um I believe it was June 16th all the way through to the 23rd, which that had a partial assessment due to the fact that Asia already displaced bearishness before 9:30. So I believe from the last markup from the 23rd, which was Tuesday, only just yesterday, the very last thing that was left on here was the inversion that was identified and spotted on the 30 minute. Then from there, like the arrows and everything, way better on Trading View. But from there, the market pretty much respected that inversion and came into this fair value gap here. And I didn't want to touch anything in relations to my markup from this morning, just for credibility purposes, just to show you guys that the models are things that I am broadcasting here and just showcasing on the charts how these levels end up becoming important later on, and we actually seek and destroy, buy side and sell side, whatever it is I have marked up on the chart, versus what I'm doing in current time, and then how they deliver after. So Wednesday, I have not touched anything from this morning's session. So you'll see all my levels and all the interactions that I had with price for today. I pretty much waited all the way to the end of the day, just so you can see how price delivers for the entire trading day, and then how it finishes at the end of day. So there's only 10 more minutes for this PA to continue playing out before the market closes for the day. And then this retracement here, this long correction up on Wednesday. These things are going to change and get a lot better once I clear up the clutter and adjust the levels and things of that sort. But pretty much how we've made the high and or low close of the candle for the day, and then price retraces up here and closes, and then that'll be it until we see what the market is going to do in Asia, which there's only an hour delay before the market opens back up again, and we see what that new Asia gap or range will create for this leg of structure going on up. So continuing off of where we left off on Wednesday, this is a continuum of that partial assessment. So we pretty much continue to sell off Tuesday. A lot of that move was already shown, back up here on Monday, but really when we opened up on Asia here, this is that Asia opening range, and delineated for you as well here, so you see exactly what it is that I'm talking about. So right here, we opened up at 1800 GMT, which is 6 p.m. in Asia. This will start the next tradable day for Tuesday, but this is in continuum with Monday's afternoon, late, night session. So Tuesday we end up selling off here, trading into that fair value gap here, being spotted on the 30 minute, and price starts to break itself down. Trying to get a drawing tool for you guys. So price decides to continue breaking itself down at 6 p.m. So that candle is bearish. That 6 p.m. opens and forms the high up here in that FEG. Candle is open and price is pretty much bearish below. So when you look at price opposed to how it looks on the hour, you would pretty much just see that that entire candle for the 6 p.m. candle is just bearish. So that's the importance of meshing time and price, and using that prognostication of the two to be able to build insight on these trading models and or approaches. So market continues to trade lower. We trade into that level of support here, and the market continues to keep trading lower, going off into the remainder of the session. So as price continues to sell off, we've already gotten two different, entries that you could have caught for the handle going lower, but really you're looking for that 930. So you can tell that the 930 pretty much just did really nothing after that huge sell-off, just straight manipulation, really accumulation of orders. So market is just whipsawing back and forth, right? So as I'm marking this up, just gonna notate off the higher ends of the range, and then of course the lower ends of the range, and then notice that the market is pretty much trading back and forth between these two things, and this will hopefully better your understanding of price fractals. So I put an ending here for this PA on this 1530 candle. This 1530 candle would pretty much be 430. I know that the market closes at 455, but since I'm on the 30-minute chart, this is the closest candle that I could get to that 5 o'clock window. Now I will make this line red because I want this line to delineate the closure on the trading day. And we're going to get into this range here, the very bottom portion of the candle, as we continue to, expand back and forth on this day. So this is the measure PA that I'm looking at from this range high here at 054.25, and then the low here at 29,616.50. 29,616.50. So at one point in time, this low here at 9:30 was the low on the trading range day. We continued making the lower ends of the day as price just keeps toppling over and over, going lower and lower, right? At 9:30, that's usually where you see the manipulation take place, as ICT would call it, the Judas swing. So in the Judas swing, we pretty much had lower first. Initially, we were already bearish. Market is, pretty much sitting within a premium, strong bearishness, but we're getting these huge draws, up and down. If you remember, there was that gap, that price left back here, and we finally traded to and through that gap. So that gap has pretty much been filled, and now we're starting to see price react a lot better now on its deliveries after it's finally sold off into that gap. Very strong move back up, literally, in about 1500 GMT. So if this is 12 o'clock, which would be noon, that means that this 1300 would be 1, and then 2 hours later would pretty much be 3. So to 330, so 1400. At 3 o'clock, we ended up making the bottom here, and then price ended up flipping and reversing, but I'm gonna get into that. So going back into continuing Tuesday, this measured high, this measured low, the Judas swing at 9:30, and this is where you start to break down and assess the situation on the lower time frame so that you can figure out your entry model. Now this low here that's shaded in black is the low from June 17th, which comes from the previous trading range from last week, and just drawing that level out into the future. You can see how a lot of times these levels become very reactionary when they do have some importance within the marketplace. So I'm just using that to my advantage of notating off the highs and lows within the marketplace, dragging off to the right, and studying the reaction off away to these levels, things of that sort. And you can use them for confluences, really. So for this zone, I'm pretty much gonna shade, let's try like a nice tint yellow, and this is our zone of study. So we have our 9:30 Judas swing, and this is for Tuesday's PA on the 15-minute chart if you would like to follow along with your markup, whatever it is that you have. So we have our Judas swing at 9:30. You see here at 3 o'clock in the morning, this last up close candle and these down consecutive close candles required activation of this orb here on the 15-minute. So on the 15-minute, we have this bearish OB. And the coordinates for that comes at 29,969.50. Market trades through that up close candle, and we see how the market bottoms out, fails to take out this higher low or lower high in a sense. So, failed price swing. Price fails to climb higher. We end up making a lower high here. How do you know it's a lower high? Because we have up close, high, higher high on this candle's wick, and then lower high on this down close candle's wick. So failed move higher. Price comes down, trades through the up close candle. And reacts going further straight down. It fills in that range within that fair value gap here on the 15, and then continues to make its way down. Now, a lot of the times you do not need to see price get underneath a candle's wick. You just need to see it get underneath the lowest body close. So it gets right underneath that lowest body close at 11:30, wicks right through it, and then comes back up, still respecting the fair value gap, trading within that range, failing to climb higher yet again, toppling out here, and then it continues to fall. So every attempt that we had trying to go higher, it failed, and price pretty much went lower. So not really necessarily any type of rocket science, just continuous breaks going lower. Price is still breaking its way down. That measured retracement going up has now been targeted for sell side and efficiency purposes. So that level of sell side here gets targeted when really we're looking at the big juicy one, which is the low of the day. So at one point in time, the old data lows were coupled back here. Price just kept sweeping lower. We make a low here, draw higher, come lower, make a low here, draw higher, come lower, make a low here, draw all the way up, make a short-term higher low, come back up and retrace and trade back through both of these lows, taking them completely out after engineering liquidity into the marketplace. From there, Tuesday's low ends up sparking that off as the low of the week. So June 23rd, 2026, this ends up becoming the low of the week, and that data point is priced in at 29577.25. So that is a level that you can study directly opposed to what you have on your charts, and just leave that on the chart as information, because this level does become very important. This is a level from the weekly time frame. So if price has a willingness to come and trade back through this level, there's a strong chance that price might reverse, or we could strongly trade through it. You treat PD arrays off the weekly, monthly, and daily all the same. We trade into these areas, more than likely you're going to expect a strong reversal or trade back into the range. It happens 90% of the time. That is how the ingenuity behind reversals just work. So this low on the week, which ends up being the low on the trading day for Tuesday, price trades away from this low. We come back up in Asia. So dragging this over, since this is the closure of today, and dragging it over into the new day. So 1800. And I'm sorry, that 5 o'clock candle is not the closure on the day. This is 4:45. The close on the candle itself should be at 16:55 now that we are on the 15-minute chart, so it will change. So right here, now that we're on the 15-minute chart, that 1800 candle signifies the opening on the day. Price trades into this inefficiency here off of its open, and I did take this trade as well. Asia, I took shorts right here, and once we traded to that FEG, keep in mind price is bearish below, and the market sells off in Asia for about 218 points to the downside. So I thought off of this reaction here and going lower, we were going to get right into that low of the week. Price hesitated, only coming about a few points short, 8 points to be exact. So it took 4 hours to magnetize itself back down to this low and failed. That's cool because this will still be a level of engineered liquidity when we do get back here to target it again on the sell side, which does very much happen on today, which is Thursday. I'm sorry, Wednesday. So now this is getting into the actual trading day. So nothing has really changed as forth with my levels and targets. But now, you could drag it out to the right here and look at how prices traded back into these levels. Coordinates, we traded through the 29,585.50 level, which was a level of engineered liquidity. And right here, reacting right off of that candle here at 9:45, we traded right into the low of the week and sweep sell side all in one go. Originally, price came into this 1 minute FEG here. I'm sorry, it was on the 15 minute, but on the 1 minute, it does have some type of lower time frame refinement. I'm going to clear up all of these markups and freshen the chart, just make it look a whole lot better, because this is pretty much what I was looking at before everything that happened at 9:30. So at 9 a.m., all of these things will pretty much change and look different, which I might just end up switching over to TradingView chart just so I can replay the data and not have all the chart clutterness. But for this purpose, I will just add everything, leave it as is. So on Wednesday, the very first thing that I would do here for you guys is delineate that midnight opening price. So how that pretty much works is if price is above the midnight opening price line, we are bullish. If it's below it, we're bearish. Very simple. And when you're expecting to be bullish, you want price to be below, so you trade below the open. And when you are bearish and looking for sales, you want price to be above the midnight open, and that is where you take your shorts. So it's just a very clean, nice understanding of premium and discount prices and where the best opportunities for taking your short and or long shall be placed at. And it's either above midnight opening price for shorts or below midnight opening price for buys and or longs, whatever it is that you want to call it. So our midnight opening price line is 29,746.75. Price is pretty much bullish above, but really we were sitting inside of a consolidation. And what I did with this consolidation here was I pretty much measured it from this high, which I'm going to mark it up as cleanly as I can here with all the new PA, and then I go to TradingView and clean it up and things of that sort. So right here, into this low, went ahead and drew that fib and got the consequent encroachment of this range coming in at 29,809.25. So this 15-minute IFEG, price traded into it at 9 o'clock on the dot. We came up, reacted in it, and shot straight down, targeting this sell side, resting underneath this low, filling in this 15-minute fair value gap here, and also enclosing this 15-minute order block range here, which was resting at 29,686.50. Then at 9:30, we traded right through the old data low at 29,654.75, and then by 9:45, we seeked and destroyed any sell side, stop hunting anything that was resting below the data weekly low, and then of course continuing to topple lower. Price trading here at 10:15, which is pretty much in the embodiment of that 4-hour candle. So we trade lower off that 4-hour, then the 4-hour completely flips and rallies higher. And you know why? Because it is seeking and destroying liquidity to the top the same way how it seeks and destroys liquidity at the bottom. So red line here, reversal setup. Market comes and clears two levels of buy stops, two levels of where potential new place longs could be resting at, and of course, any new selling as well. Both of those potential players are being stopped out here, while smart money is clearly exiting, mitigating some of their longs here, to go ahead and get into new place shorts and send price lower just to drive it way back up. So crazy day today. Taking that away, just cleaning up the chart as I go. That targeted SSL 29,525 flat. Price trades into that level, continues to break itself down. Price remains bearish below, giving you an idea that would seek and destroy this level right underneath that low on the week, which it does. So we trade through that low of the week multiple times. So we come down, trade to it, price stays under here for a little bit, and then we trade back away from it and then back through it and into it again. So insane day. Low hanging fruit. So underneath the weekly low, the market ends up trading an additional 312 points and 2 ticks. So that is a huge level of manipulation, and or a form of stop hunting underneath the weekly. After that, the old data low from back here, which was 29,654.75, now becomes the low of the day here. So let's title this new data low. And the coordinates 29,264.75. That is the low of the day. Price has not came back to this low whatsoever. This low was created at 12, 13, yeah, 12, 13 would be 1, 14 would be 2, 1500 would be 3. So at 3 p.m. we end up making the low, the new low on the day. Price no longer remained bearish anymore after selling off for about 642 points in 3 ticks, all within 4 hours after sweeping a level of buy stops up here within, you know, the short-term macro ends of the range. So just 1 hour highs, you know, 1 hour, 4 hour highs, those grouping of confluences there with those highs. Price ends up sweeping that and we trade lower. Pricing in the new data low, and then from there we get our market structure flip and change of direction. How do we know? The market comes underneath the old low. Once the market sweeps, we perform that sequence of driving low, lower low, and then higher low, which is pretty much what you want to see when you're anticipating a change in direction. So think of it like a little cup or bowl. Low, lower low, higher low. Once you see that, you look for the break, which this would pretty much be a shift in market structure. And the coordinates for that would be 29,563.50. So you have a couple of confluences for the sweep. We're below midnight opening price. Targeted SSL has been drawn out, and you do have old levels as well on the left hand side of the chart if you want to go back that far and find them. I'm just trying to show you what happened for the day. I'm not really taking it that deep, at least not on YouTube. But the market starts to change its direction here and flips, and then you get a nice juicy candle here at 1600, which was pretty much at is 1600. 1600, 6 p.m. will be 1800, 5 p.m. So this is 4 p.m. This 1600 candle. So at 4 p.m. afternoon, the market gives you a change in direction, shift in market structure, very nice entry on the 4 p.m. stick. And this candle here is pretty much the candle that you would look to enter long, expecting price to pretty much break out. And you study that individual move here off of this candle's fractal, open, high, low, of course, and then the closure of that candle. Your entry is in this fractal. So it looks like it had no retracement whatsoever. It's just massively responding to the upside. So your entry would be at the break. So right here, the break, you enter long. Your stop loss, under the 4-hour low, or 50 points at least. And then call and response, you target the highs, really resting buy side at 30,047 flat was really the identified high. And the market pretty much went up for 483 points, a 1 to 9 RR, risking 50 points like normally, and that is a huge draw on the trade. So I'm not trading the afternoon session. I've already participated in the market and caught longs and or shorts earlier in the day, as the market was flip-siding its stages of delivery. But this here in the afternoon was way cleaner than what we did in the morning, by a long shot. Though the morning did give off great opportunities of selling, this right here, this massive long bullishness, the the non-fighting of its side of delivery, that is usually what you want to see on a very huge expansion day. Is you want to see the market not fight itself trying to get to where it's trying to go. You want to see long drastic candles going in the direction that you choose, because that's going to literally help you get into the trade, be able to scale in, move your stop loss and a profit, because there's just so much momentum in these candles going into one direction. So I do like that. I do like the afternoon move a lot. This was very, very clean. And I think this should be clean enough where I don't even have to go to TradingView. But I don't believe that I marked this up on TradingView, so I don't want to make the video way too long. TradingView has all of my old markups from the things that I was looking at before. So I guess what I'll just show you guys here on TradingView is that real level that the market was probably trying to draw itself to, but it failed to get to, unfortunately. So it looks as if the market was calling for that 29,231 point tick level, which on the higher time frame, if I was to click on this intervals, current interval and above, then go to the higher time frame, this is what it looks like on the 4-hour, a swing low. This is what it looks like on the daily, the low on the daily stick, and then on the weekly is just in between that range, but we see where it's at literally on the day. So I like day-to-day trading, which targeting daily lows, highs, things of that sort. That is why I have such, I guess you could say, unrealistic target projections for 2, 3, 400 points. That's because I'm trading solely based off where the daily is more than likely to go, and I use that daily candle as a confluence to where I want to see price, pretty much get to my target objectives. So it did not trade into that daily low down here. It was about 34 points off before flipping. So we drew lower, traded underneath that low of the week. Very strong reaction, about a 300-point sweep, and then the market traded back up, clean levels of buy side, extending itself, going higher, and pretty much creating this orb here as well that we now have resting here on the 4-hour. So two things that can happen here: either this order block here remains reactive and we just continue expanding, price continues to stack and go higher, or we come back into the orb range for further retesting, and then we get that little juicy long. That is a possibility of what it can do, or we remain bearish and come back lower. There's no telling what type of retrace or what type of momentum might happen in Asia going later on into the day. So I don't really try to predict anything. I just do what the market is telling me that it wants to do and leave it like that. But based off how the market is moving, I guess I could just give you things that you can expect. So if we pull back that far away from underneath the low of the week from the 23rd, expanding for literally 895 points, that the market responded away from that reaction going lower. So if we're going to continue to go higher, food for thought, and we could see price possibly return back into fair valuation, areas of fair valuation, such as here. And this is on the 1 hour. So just identify, this is on the 4 hour, sorry. Just identifying order flow for you. So right here, we do have this fair value gap. And if price doesn't reverse within this fair value gap and head lower and trade underneath the 29,263 level, which was pretty much the low of this daily candle for Wednesday, then we can see price continue to just keep going higher after now filling that gap and seeking the buy stops, resting above. At 30,967.75, we could possibly get back up here, which would pretty much not be, all-time highs, but close enough. Yeah, just a few points off, so it's like 2 seconds. It's like 7 points off from all-time highs. So that is a possibility of what we can see this trend do when trying to get back up. If we're going to remain bullish, 1,000-point draw up, it's not impossible, but we just have to see exactly how this range is going to play out, whether we come into this area here. Let me turn this off, it keeps dragging me. Either we come into this area here and price sells off and we get underneath the low, or price respects this area that we strongly reversed from, and then we just keep going higher and seek buy stops resting above. So it could be any of these levels of buy stops that are literally placed on with the short-term highs within the trend. So that's pretty much all I have for you guys here. That is the full-on assessment of how price now looks for the 23rd, which was Tuesday, and then pretty much how price played itself out for Wednesday, the 24th. So if you have not seen my Wednesday trade idea, it is posted on my social platforms. On Instagram, it's in the reels. You can see my entry taking the long on NQ and capitalizing on about 90 plus points. I believe that's what my P&L high was. I was up about 90 points, and just trail stopping, let the market do what it needed to do to breathe. And once it pulled me out, well, it did not pull me out, I manually closed once it got to a particular level of interest, and I exited at buy stops. And then shortly after, market sold off, and it's just been buying back and forth in these huge range pools, going up and down, up and down. And we finally start to break out literally after 3 o'clock in the afternoon. So afternoon session definitely takes the handle for the win. Morning session, not too much, but it did give off nice moves going down and or up. So hopefully you guys enjoyed the video, and I'll see you guys next time. Peace.